Welcome back to this Moneycontrol live stream. We are watching Closing Bell with me, Nandita. Khemka.
And I'm Yatin Mota.
Well, Yatin, it was a good day of trade given the fact that we've shut shop above that 19,550 mark. A third day of gains, so to say, coming in for the benchmark indices, marching towards 19,600. Let's see whether or not we manage to reclaim that level tomorrow. But if you look at the broader end of the markets, there's a party going out, going on out there, given the fact that the Nifty Midcap Index, surpassed that 40,000 mark for the first time, and the Smallcap Index has also gained in excess of 1%, hitting a fresh high as well. What was doing well today? Lots of sectors were doing well. Pharma, Realty, metals that weren't doing all that well in the first half of the session managed to, stage a rebound, and even that pocket ended the day in the green. IT continues its run. PSU banking index as well. Yesterday it was among the top gainers. Even today, last time I checked, it was up somewhere around 0.7% or thereabouts. And FMCG also doing well. But what didn't do well was the auto and the private banking pack. Those were among the sectoral laggards today. From the Nifty 50, some of the gainers that we saw today were Apollo Hospitals, Coal India, that was the top gainer on the Nifty yesterday, today as well, gaining in excess of 3%. Sun Pharma, BPCL, Bajaj Auto were some of the other names. On the losing end, you had Ultratech Cement, you had Dr. Reddy's, SBI Life, Maruti, Eicher Motors, so some of the auto names under pressure today. But Yatin, let's talk about the broader end of the markets, given the fact that there is a party going on out there.
Absolutely.
Movers and shakers there.
Yeah, and if you look at the Midcap 100 index of the NSE, it hit a fresh record high and crossed over that 40,000 level. So clearly very strong momentum coming in for the midcaps. Obviously, the relative strength indicator for the Nifty Midcap 100 is more than 85. So time to be very stock specific and to be cautious. Because a lot of stocks, being overbought, and now the Nifty Midcap Index is trading one standard deviation above the Nifty 50 valuations, which means that the midcaps are now trading at a 25% premium to the large cap peers. Nevertheless, if you look at the markets for the Nifty Midcap Index, today the Midcap Index rose by nearly 1%. Similar was the gain with the Small Cap Index. Today we had the listing of Vishnu Prakash IPO. That stock moved nearly 50% to the IPO price of 1,900 rupees, settled at close to 145 rupees per share. But if you look at the gainers today, Raymond brokerage report, stock up 10%, IRFC new record highs, stock up 8%. If you look at other stocks in the mid-cap end of the market which have done well in today's trading session, you would find probably a stock like IDBI, 70 rupees, up 8%. Nazara continues to gain, stock up 8%. NBCC, CDSL, Tanla Solutions, Bikaji, after a block deal, that stock also moved nearly 5%. So a lot of stock specific action that really is charming the mid cap and small cap indices.
Well, charming, as you rightly said, and as I said, there is a party going on, at least in the broader end of the markets. But let's also take a look at some of the stocks that are on our focus this afternoon, starting with Raymond, which of course even you mentioned. There are some positive brokerage reports. Jefferies and Motilal Oswal both have actually initiated coverage with a buy rating on the stock. Target price set by both us is somewhere around 2,600 rupees per share. Now, when you look at what Jefferies has to say about Raymond, it says that the company has addressed all the past concerns of investors on the debt as well as corporate structure end. In fact, it has also turned net cash vis-a-vis a net peak debt, and it is set to list its lifestyle as well as realty business separately. So that is going to be the key trigger going forward. In fact, Jefferies has also noted that the growth focus is visible across businesses, and that is led by category expansion as well as gains in market share. And Jefferies also expects earnings to grow at somewhere around 13% and 24% CAGR over FY23 to FY26. Coming to what Motilal Oswal has to say, it says that the demerger and promoters' capital infusion will be the key growth drivers going forward. In fact, it says that multiple growth levers are already in place for Raymond, and real estate will be the key focus area and the key growth driver for the company going forward. And Ethnics by Raymond is something which is aiming to expand its wedding reach, and today the management management was on CNBC TV 18. In fact, he has said that ethnic is right now a very small part, but it will see significant growth going forward. And festive season is expected to be extremely strong, and wedding spends will come back in a big way. That's what the management of Raymond has to say. Now, Motilal Oswal also has to say that the stock of Raymond may have doubled or given 20% kind of returns over the last 1 year, but valuations, according to Motilal Oswal, are still fairly compelling, given the fact that it trades at a PE for 1 year forward PE ratio of somewhere around 15x, which is at significantly lower compared to other retail and discretionary companies, which are valued at nearly 45 to 50x on a 1 year forward basis. So that's very positive brokerage views coming in on Raymond, and which is why we saw that reflect on the stock price as well, up somewhere around 10% or thereabouts. And looks like given the fact that the management has given good commentary, looks like the wedding season will also bode well for the company going forward.
Absolutely, and the real estate piece for Raymond is particularly doing well, and obviously the kind of unlocking the management plans post the sale of its consumer business to the Godrej Group really would be rewarding for shareholders over a period of time. Now, shifting focus from Raymond to another consumer-led company, that is Prince Pipes. Now, Antique has a buy rating on the stock. They expect significant returns from the current market price. If you talk about Prince Pipes, they expect a 14% volume CAGR for the next 3 financial years for this pipe company. And if you look at the EBITDA, there also the growth should be in excess of 14% according to Antique. Now, the bathware segment entry set tones for the long-term growth trajectory. And if you look at the PVC prices, which is basically a raw material derived from petrochemicals, there also we have seen some cool off. So, the raw material side has been under control. Regular price hikes probably would mean that the margins also could improve in the short to medium term, and hence the stock of Prince Pipe was in focus today. Obviously, there is a lot of stock specific action which is going on, but if you talk about Antique's note or Prince Pipes, probably these are the mid caps wherein probably the longer term or the rural demand recovery should take earnings as well as revenues higher.
All right, Prince Pipes there in focus, but let's also talk about the new listing today that took place. Vishnu Prakash IPO, this stock listed at a 67% premium, that's somewhere around 165 rupees or thereabouts, vis-a-vis the issue price of 99 rupees per share. It was a bumper debut, even though grey market premium was suggesting that it would list at over 50% premium. That's exactly what happened. In fact, let's talk a little about the company. It's an EPC company. It's engaged in the business of designing and constructing infrastructure projects for the government, as well as central as well as state government, and also private bodies across 9 states and 1 union territory. Now, the government thrust on infrastructure and strong order book are the key positives going forward, and according to analysts, they believe that the valuations are fairly reasonable. Remember, the company raised 300 crore rupees via its IPO that comprised largely of fresh issue. In fact, only of a fresh issue, and the IPO proceeds will be used to buy equipment to fund working capital needs and of course for other corporate needs as well. Now, analysts are pretty much impressed with the company's financials. If you look at the top line growth, it grew at around 55% CAGR over FY21 to FY23. EBITDA also grew 86% CAGR over FY21 to FY23, and the EBITDA margins improved from somewhere around 9.3% in FY21 to 13.4% in FY23. So, analysts are pretty upbeat on the future prospects of the company, and they have recommended holding on to this stock for the long term. But the only key risk being the client and regional concentration is looked upon as the only risk, given the fact that around 90% of its revenues of its FY23 revenue came from its top 10 clients, and 62% of the pending order book is also concentrated in a particular region. So that's the key risk that could emerge for this particular company going forward. But aside of that, experts are pretty upbeat on the future prospects of the company, and they have recommended holding on to the shares of this company.
Absolutely, and the kind of IPO response this company got was stupendous, and still a significant part of their business comes in from the government, especially the government of Rajasthan and the local state governments. Obviously, there is a risk. Given the fact that sometimes there is a cost overrun, there are payment problems. Let's see if this company maintains healthy return ratios for its shareholders, because given the fact that the IPO response was quite strong, the expectations for the momentum from here on in terms of earnings, in terms of share price performance, surely is high, and the investor bar is also set slightly higher for the company to perform moving ahead.
Right, that was all about the stocks on our radar this afternoon. With that, we've come to the end of this edition of Closing Bell. If you have any comments, leave them in the comment section below, and of course come back and join us in the pre-market show tomorrow morning at 8:30 a.m. But for now, it's a goodbye from me and Yatin. Thanks a lot for tuning in. Stay tuned to Moneycontrol for all your other news and updates.
How do world leaders view India?
I've long believed that the relationship between the United States and India is will be one of the defining relationships of the 21st century.
The bright spot of the global economy.
The growth rate for India, which is 6.8 in 2022. Let's not forget, this is one of the bright spots in the global economy right now, such a high growth rate.
The potential of India is enormous, and you have now a reformer, a radical reformer, who has the ability to transform it.
On the verge of a big transformation.
इस अमृत काल में हमारे संकल्पों की सिद्धि हमें आजादी के 100 वर्ष तक ले जाएगी.
A magnet for investment.
I'm actually incredibly excited about the future of India. I think India has more promise than any large country in the world.
The world is bullish on India. Moneycontrol is bullish on India. Join the campaign. Tweet to us with #MC Bullish on India.